Asian markets. They are largely mixed, but some of the gains they are because of what we are seeing in the Japanese markets.
Reliance Jio has taken the lead and hiked tariffs for the first time in 2.5 years.
It looks like we will, before anything else, get to the upper Bollinger bands. It's a level that we've put up at least for the last 3 days. Bharti also has announced tariff hikes. There you go. We should put that out as breaking news.
Opening bell is indicating a positive start, so let's keep that on our radar. 30 points higher.
Our job is to worry, both in a bear market as well as in a bull market, and probably now more so in a raging bull market.
Today we had Stanley Lifestyles, which listed at a premium of around 32%.
The Nifty is now surpassed 24,000, comfortably above it with a 100-point gain.
A portion of the canopy roof in the departure area of Terminal 1 at the Indira Gandhi International Airport caved.
Right now above the 24,000 mark as it continues to be in the green.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that was a day so far, and you're with us here on a fresh new edition of Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me my colleague Reema Tendulkar. Reema, hi. Another pretty volatile day.
Oh, absolutely. But flat now as we speak with all the volatility. And we've had 4 good days on the trot. So today, pausing is not so bad.
Pausing is not so bad. My God, I mean, I just looked at the market 5 minutes back and we had 50 points. So it's a steep fall. Yeah, it's a very, very steep fall. Look at the Nifty. There you go. That's what I'm talking about. That's 40, 50 points worth, that turn that we've seen. Because we're at what, 234 right now? 230, we were at about 24,118. And we're at about 24,062. So, of course, it's nothing like what we had yesterday. Yesterday, we had 800 points worth of move on the Nifty. The down and the up, and the down and the up. We had, 300-point moves intraday yesterday. So it's not that volatile, but it's quite volatile. So from the day's low, we are up not 100 points now because of this latest sell-off at about 50 points off. And from the day's high, it's not 70 points, it'll be more, about 110, 120 odd points from the day's high. So that kind of a session where I think, in terms of just sort of narrating what's going on, you've got to just be very, very current and very, very live with the volatility. Now, just a few points in terms of sectors, and I think that's not changed that much. Telecom stocks are seeing a little bit of profit booking, and we'll talk more about this. Private banks are seeing pressure, and the bank Nifty, largely because of what we're seeing in the private bank space, is pulling back. And on the other side, PSU banks are doing well. So PSU banks took a nice, clean, long break. And they started this morning in a positive note, names like PNB, etc., and that is continuing. The PSU Bank Index, in stark contrast to the private bank index, is up about 1.25%. Pharma names are higher, and CPSE, government stocks, outside of PSU, outside of the banks, are also doing well. And notably, small cap index is up 1%, or at least was up 1% when I looked at it about 5 minutes back. So we've got some action going on our hands for the next 60 minutes or so. Reema.
Well, Reliance Industries is the big mover. It's up nearly 3%. So yes, most of the other telecom names like Bharti, Vodafone, Idea have corrected, but Reliance Industries continues to move up. 2.8% now. For the week, it's seen a gain of about 8.2%, taking its year-to-date rally to 21%. So if it wasn't for Reliance Industries, I think the picture would have been a lot different. Also keep in mind, crude prices continue to inch up, and now they're at 86.9. Broadly, oil and gas is having an up day. So the Nifty Oil and Gas Index is the best performing sectoral index. Reliance is up. ONGC is moving up. Gas stocks like IGL are seeing buying. Mid-caps, which were trailing the frontliners for the last couple of days, have also tried to play a bit of a catch-up. So the mid-cap index is up close to about 0.5%, and there are pockets of strength. So for instance, Tire, that's where you are seeing big gains. JK Tire, 8.5%. Apollo Tires is up close to about 5%. So lots of activity, when it comes to the mid-cap end. Stocks which have been in the news like Star Health continue to attract a fair amount of interest. But flat now on the indices, Reliance is up But on the way down, private sector banks are weighing in. So how should you position yourself on the last day, on the last hour of this trade? And this is the end of the week, the month, and even the first half of the year. Mitesh is now with us for a few closing comments and strategies. Mitesh.
So I would believe that, one, we have had some kind of an intraday dip which got immediately bought into, and we still therefore remain overbought. Now I think, I've been talking about trailing the stop to about 24,000 on the spot, maybe just 10 odd points below that. I think do that, keep a tight stop loss. I understand that, tighter stop loss have some chances of getting hit, but they will also protect the profit which you have been making for last few days, the opening which has happened. So just do that and let's see how it goes. On the stock side, IGL, I think Nima was mentioning that that's given a good breakout. So buy here with the stop at 494, 493 half, and look for a 525 kind of a first target on the upside. Eventually, we may look at high levels, and Jubilant Foods is a buy with a stop at about 557 for targets of 580.
Okay, all right, I got that. Thanks very much, Mitesh, for that. We'll come back to you for more. But Rima was talking about Reliance Industries, so let's take that forward. So this it's a day that the market cap for the company has hit 21 lakh crores. Sonal is here with details on this one and what's going on. Sonal, over to you.
Well, yes, that's the big number, 21 lakh crore rupees. That is in terms of market capitalization for Reliance Industries. And it was just 4 months back in February that we saw the 20 lakh crore market capitalization mark. So it's been a swift move from those levels, 1 lakh crore rupees just in last 4 months. We've seen a lot of things happening in the sector, but specifically in the telecom space. And we've been talking about that since last evening. And a few brokerages which have upgraded the stock on the back of this. For instance, Jefferies has increased the target price to 3,580 rupees a share. They say Jio raising tariffs by 13 to 25% is a positive. However, they've gone ahead, cut the estimates by up to 3%, but they expect Jio to deliver 18% revenue growth and 26% PAT growth over the next 3 financial years. And they have tweaked Reliance Industries EBITDA by 0 to 1% to incorporate Jio's numbers as well. But overall, they call it a positive move. But this was something which most of the brokerages were expecting as well. Morgan Stanley has an overweight call with a target price of 3,046 rupees a share, and which is actually below the current market price now. They say this is in line with their base case expectation. The price hike that has come by. Monetization of investments remains in play, and next catalyst to watch will be startup of new energy cash flow streams by end of 2024. A lot of these new energy capex that will come on stream by end of 2024, starting 2025, and this is something that the street is betting on, and that's why this excitement in the stock right now.
Record gains for the third day in a row now for Reliance Industries. Prakash, what have you made of the up move, this breakout this week?
So, Rima, I think this move, of course, was, we were looking for a trigger to have something like this happen, and that's come from Telecom. But, mind you, the way the setup is for Reliance in terms of all its verticals, you'll probably see really sequentially have something or the other positively happening in each of those. I think the next, this thing would probably be also retail. Very clearly, retail is something which has grown phenomenally. It's in terms of expansion of reach and presence, but the revenue build-up and the profitability that needs to kind of come in will probably start happening post the monsoon. So that's the trigger that people definitely start penciling in terms of the expectations that are building. And of course, the O2C business also has been probably steady state for a while. Wasn't the best of quarters last quarter, but I think given the way things are today, it could also start surprising us, especially with the gas output. Now, these are things which may not look very phenomenal when they happen, but in the long term, for a company like Reliance, the kind of capital that's been invested, the moment these businesses start throwing a lot of return, the ratios start looking very impressive. And here you have an opportunity to possibly look at some sort of a demerger in the next 12 to 18 months, but probably begins with retail is my sense. But you have a lot of these things building, optionalities building up. And as you rightly said, the hydrogen business is the new energy business, something which everybody is waiting to kind of get some semblance on numbers. So, Reliance is set up in such a way that you'll probably see it continue doing well. And it's probably taking the Nifty along itself to these new highs. So I don't see there's any overbuying of sorts. Or, it's not getting into that overbought position as yet. So you'll probably still see the momentum with some more legs, maybe another 5% in the next month or so.
Right. Prakash, hi. Good afternoon. Two questions. One, is there anything happening on Cdsl? 16-17% move today. It's the number one volume traded. It's a huge volume traded name today. And the other is tires, CEAT and JK and Apollo. I mean, CEAT is up 10%. Yeah.
Yeah. So good afternoon, Prashant. So CDSL, of course, it's that bonus that's kind of coming through. This is a company which works on 70% plus EBITDA margin. The volumes have been phenomenal in the last many years, and it's actually accelerating more in terms of its growth. Though we started thinking that there could be some sort of a peaking out, but then you have vectors like getting insurance policies to be dematerialized. You have some of the other potential, this thing. And remember, we are looking at the beginning of a very new bond market for India. Now, what happens is it will start with the institutional side. It'll probably stabilize there, reach some sort of an equilibrium. And of course, we're talking about AAA bonds and all, which are going to be most of the times making up for the bulk of the volumes. But eventually, the market will start kind of percolating to more retail kind of products as well. And CDSL is right there in that spot. I don't see any competition coming in the form of the NSDL bandwagon kind of catching on yet till the NSE listing happens, and we have some very specific opportunities to participate through that. But I would believe CDSL will continue to do well. As a matter of disclosure, I have it since a long time in my portfolio, and people very clearly understand that once the reserves are capitalized, of course it's just a technicality in terms of the balance sheet, but at least the number of shares that you own ends up making it look very attractive for retail investors. And this is a retail-focused business as well. On tires, Prashant, my sense is, there's a lot of shift happening. And I spoke to a couple of vendors who supply raw material to tire manufacturers, where the demand is now actually coming in from global markets. It's India's started to look very formidable in terms of what it can do, supply to the global markets in a far bigger way. Earlier, it was just the Apollos of the world which are doing it. Today, you look at CEAT, that's kind of scaled up so much. Even some of the offshore, the off-road tires, manufacturers like BKT and all have kind of revamped themselves in terms of the capacity, the bottleneck, all of that. But I would play this from a picks and shovel kind of a angle. And you look at a company like Philips Carbon, supplies a lot of raw material, very critical raw material to tire manufacturers, all of them in fact. And its new plant has actually started giving it enough throughput to be able to scale up that. So if the demand goes up for tires, PCBL will probably benefit far more. And of course, it has some other optionalities in terms of the new Aquafarm business that they've acquired, but we'll talk about that separately someday. But I think the best way to play tires will be a approach with the PCBL kind of a play. You're more insulated and resilient irrespective of which company does it.
Okay, in fact, talking about tire, there's also a bullish brokerage note which has come out on tire, which perhaps explains the kind of up move. Vivek joins in with the details. Vivek.
Well, that's right. So MK today has come out with a note as far as the entire tire space is concerned. They're saying, especially for JK tires, quite a few positive triggers are in place. Number one, they're saying the trucking industry fundamentals and sentimentals currently are quite healthy. They're also saying that the CV industry is entering an upcycle from FY26 onwards. They're saying that Indian tire companies continue to close the gap as far as the competition with MNCs are concerned. They're saying improved demand and premiumization at 8 times FY26 price to earnings. They also believe valuations are quite supportive. And now what the other important development is that there's a sales note from Elara which says that Apollo Tyres has actually taken a price hike of close to 1.5%, and this is going to be effective from July 1st. They're saying that the move largely covers the raw material price inflation that has been seen from Q4 to Q1. In fact, they believe that there could be more price hikes on the annual in order to go ahead and mitigate the raw material price inflation in terms of natural rubber prices that has been seen. Overall, some price hikes coming in and some positive brokerage notes is something that is aiding the tire rally today.
Okay, thank you very much for that. Prakash, coming on Polycab, the stock has had a one-way up move. It's doubled so far this year. This promoter selling, it's not much, 2% stake, but would you read it negatively? Could this, or is this dip, buying opportunity?
So, Riman, this is now of course, all of us know about the metrics of the business being best in breed of sorts. They've come post their IPO, they've come and redefined this entire business. And I believe there's enough secular headwinds ahead of us to kind of see growth happen the way real estate is kind of building up. But, from a valuation standpoint, things do tend to get expensive till you have to wait for the EPS growth to come in. And that is exactly at which spot or juncture this stock is at. My sense is there would be some profit booking, there would be some time correction in this, and then you'll probably see a lot of institutional interest come back because it's not something which retail probably wants to buy at these levels, but the institutional money typically finds its way into these kind of names which have very clear runway to growth for the next 3-4 years. And from a business standpoint, I think the next wave of growth for the likes of Polycab will probably be a lot of inorganic growth vectors. They'll probably scout for acquisitions given the comfortable position they are in, and that consolidation will probably see a little bit of that re-rating. But the distance between them and the number 2, number 3 is quite vast, and I think they'll continue to fetch that premium even after this correction. There'll definitely be some sort of buying. This is, of course, promoters know it best, and if the promoter is cashing out whatever percentage it is, people do tend to read a bit too much more into it than just the quantum of what is being sold.
Prakash, there is so much sort of stock-specific action, right? I'm looking at Nazara. We've got a story which we'll play out for our viewers in a bit. Star Health, I mean, that analyst day. There's a Solara, where I think there's a brokerage note. Bata is up about 5%. Praj is up 7%. These are all well-owned, liquid, large names where there is sort of, a tremendous amount of activity which is going on. We'll leave it. We'll leave our conversation for now here. Prakash, thank you very much for joining us this Friday. Great to have you with us here. Have a good weekend. We'll speak again soon. We take a break. We are back with Ajay Vora of Nuvama Asset Management on the other side. Stay tuned.
Welcome back. Once again, inching towards 24,100. It's a 50-point gain on the Nifty, 100 points on the sensex. It's been a bit choppy, but the last 10 minutes, we've seen a positive tick up. IT started moving up. So Wipro's up 1%, LTI Mindtree is up 0.5%. In fact, these stocks have seen a return of about 5.5% this week itself. So ahead of earnings, which begin in 2 weeks, IT is seeing some buying. But let's get you a CNBC TV18 exclusive now. Sources tell us that Nazara Tech is likely to pick up the stake, the residual 49% stake in gamified learning app Kidopia. Rachna joins in with the details on this story. Rachna.
Right, what we're picking up is that Nazara is likely to buy 49% stake in Kidopia, which is a gamified learning app. For now, it already owns the 51% stake in the company, and this will be valued at about 300 crore rupees. Now, currently, Nazara already has 51%, which it had bought in 2020 for about 80 crore rupees. And now this further 49% will be purchased from the promoters of Kidopia, that's Anusha and Anupam Dhanuka. Speaking of Kidopia, for FY24, it clocked in about 2.5 lakh subscribers and recorded a revenue of about 220 crore rupees with an EBITDA of 55 crore rupees. This, of course, comes in at a time when Nazara has been going big on M&A action. We wrote to Nazara asking for a confirmation, but we haven't received a response yet.
Okay, all right, Rachna, thanks very much for that. So, Kidopia, it's a large asset for Nazara, and it's been struggling. I looked at the numbers for subscribers at about 2.5 lakhs. On a year-on-year basis, it's down about 18%.
So there was a change in the subscriber acquisition policy because of consent, etc., the personal data. And for the last many quarters, Kidopia's subscriber growth has been, either muted or negative. And
it's been flat. I mean, actually, I looked at the last many quarters, nothing, no growth at all. But yeah, as Rachna said, 80 crores for the first 51%, and I think, whatever, 300 crores now for...
But we know, right, kids market is a big market. It's a very lucrative market. They just need to figure out this. But, parents are willing to shell out...
Gamified learning. I don't know, I've not used it.
It's for 3 to 7. You're out of that age bracket for your kids.
Okay, all right. Well, Ajay Vora is with us, Head of Equities at Novama Asset Management. Ajay, great to have you with us here. Thank you very much for your time. So, Ajay, just a quick word on the sort of market itself, which is some have pointed out maybe getting a little overheated, positioning all one-sided, very extreme with the rally that we've seen. At least the futures data, etc., shows that. We've certainly broken out new highs, etc. Underperforming sectors have started to participate on odd days. Not today. Private banks, for example, is a case in point. Telecom tariffs are through. The hikes are through. What next for the market in that sense, Ajay, from here?
Hi, Prashant. Good afternoon, and thanks for having me on the show. So, coincidentally, this is something what we all as, money managers have been hearing from I think every investor interaction, and with every 1,000-point rally, we would say that, now it's more or less getting overheated and now it's more or less getting done. Most of the positives are in the price. But actually, if you look at it, and maybe, I've also thought about it a lot, a couple of things which actually will lead to, I would say, a meaningful market correction. Either, so historically, this is proven that either there is a liquidity crisis or you have a major earnings downgrade. At least, both of the things are not visible as of now. Although, in pockets, you may find markets a little expensive, something on the capex side and maybe a couple of other sectors. But actually, if you look at the numbers, FY25, if you are looking at an EPS, Nifty EPS of somewhere close to 1250, 1280 rupees, and if you give around 20 times fair multiple to that, you should be ballpark somewhere around 25,000 odd. And this is something, we have been maintaining right from, I would say 18, 19, 20,000 or so. That 3 months down the line, meaning we are in July already right now. Maybe by October, December, you'll completely start discounting FY26. So I think, I don't think it is overheated. Positioning wise, now it's definitely a thing, but that is more a short-term kind of a thing. But overall, if you look at it, the kind of results which we are seeing from most of the companies and the sector rotation which is taking place, I think that is pretty healthy. So if you look at this month also, it has been a pretty broad-based rally across all the sectors, right? Barring metals as a sector, you see right from cement, banking, autos, pharma, all the large cap names have done pretty well. And just to give you one more perspective over here, it's been 6 months now, Jan to June. Index is up close to 11% odd, whereas FI inflow is nil so far, right? And we got just $2 billion this month, and we saw, market movement of almost 5 to 6%. So I'm just saying that, I don't think markets are overheated as such. And last year we saw FI inflow of almost $20 billion. This year in first 6 months, it has been flat. So hopefully, if you get some more money in next 6 months, there can be a decent upside as well.
Ajay, good to see you in a Friday mood, Friday dressing.
Yeah, just trying to be in line with market mood, Rima.
Chill today.
Yeah.
All right. So, talk about the, price, the way the stocks are reacting to the telecom tariff news. Bharti, Airtel, Vodafone, Idea, all of them are reacting negatively. Stocks are under pressure, but Reliance Industries is moving up. So what have you made of that?
So I think it is definitely a positive, and that is the reason why you saw these stocks doing well since, I would say pre-election and more so over last 1 week or so. It was long overdue, and as most of the promoters have been talking about, the ARPU in India has been at the lowest level. This kind of a hike, I think it can be easily absorbed on the consumer side. So I was just reading one of the reports, and it says that the overall shell out from the consumer wallet would be somewhere close to 50,000 crores. And if you look at at least 60-70% of that flowing through to EBITDA level, it will be close to 30-35,000 crores to the entire sector. So my sense is that it is a decent number, and this gives you a clear sense that how these companies are planning to shape up the ARPU going forward as well. And we all know how cheap the data is available right now. So I don't think consumers will really mind paying a few percentage points higher, and which eventually helps these companies. And why maybe these stocks are doing well, because if you look at it, large part of the capex is behind them. Incrementally, you would see that more profitability will help them deleverage the balance sheet, eventually resulting into higher market cap. So I think that the sector has been doing well and can continue to do well from here on as well.
Ajay, the question was actually that the way the stocks have reacted, because Bharti, Vodafone, Idea, they're all down after the news. So is all the good news in the price now? And it's only perhaps in Reliance Industries where maybe there is still some comfort and valuation, because Reliance has moved up. So wanted to get your thoughts in on that point.
No, so I don't think so. It will be definitely some sort of profit booking on news, because if you look at Bharti, it has moved almost 40%, I would say, over last few months. And similarly with the Vodafone Idea as well, which has moved almost 60-70% since the fundraise. But I think that, if you do the math on Bharti itself, they'll do somewhere close to maybe anywhere between 95,000 to 1 lakh crore of EBITDA. And current market cap is somewhere close to 9 lakh crores, and add to that the debt number. But my sense is that going forward, if you have a visibility of at least 15-20% growth, I think the compounding can continue even from current level. So I think it's just profit booking on news, but the story still looks attractive.
Yeah, got that. Pull up IIFL Finance if we can for a quick bit. Look at the move which is materializing on that one. 518, 519, it's a 8% pop. That's a very, very sharp move on IIFL Finance. Now, there's no news flow or anything. They released the fourth quarter full year numbers, etc. recently after a delay, because, the RBI restriction on gold loans and IIFL Finance is still in focus. And of course, the trigger for the stock, the audit got completed. We reported that. But of course, now it's up. It's the next trigger in that sense is going to be when if and when that ban is lifted on IIFL Finance in terms of gold loans. Company, of course, has been a super performing sort of stock. A company over the last many years now, but this, of course, was a bit of a problem. Remember, the high on IIFL Finance before the restriction came through was almost $700. The low that we saw was about 300. So, it's from the lows, it's come up a little bit, but still off the highs. by quite a bit. Ajay, some of these wealth management companies, if you want to sort of comment on, I think it's now very quickly it's become a pretty well-covered space. You know, we've got a couple of foreign guys who cover it, some local sell-side analysts as well. Do you like the space? Do you own anything here?
Yeah, so we own a couple of them, but the point is that on this, Prashant, in India, if you look at it, any business which you want to build, which is a B2C business, I think the whole distribution channel is the most important piece in building that. We have seen that with mutual funds and even within the whole consumer space. If you look at any company like Asian Paint or a Lever or any consumer durable company as well. The distribution part is the most important thing. The more you can reach to the final consumer, that makes the company more valuable. So I think the same story is playing out in this space as well, which is the financial product distribution. A lot of wealth has been created in this country in the smaller towns, but I think that not much of education is there in terms of how to invest that wealth. And therefore, I think the distributors with the quality people which they have, I think is adding a lot of value at the ground level in terms of educating the investors how should they invest their money. And I think this space will keep getting better because as more and more people are getting wealthier, they are looking at more and more sophisticated products and avenues to invest. And eventually, it is the financial product distribution platform which facilitates that. So I think that, this space, as you rightly said, it's very well covered now. People have started understanding. And I think that, still it is a very, nascent stage. I think the growth rates can get better from here.
Any big portfolio calls, bets that you've made in the last 2 months, Ajay?
So, Rima, we are incrementally getting more positive on the overall consumption side. I think that, on the capex side, we are looking at many ideas, but everything is a little more stretched in terms of valuation. But consumption is something what is looking very attractive, be it consumer durables or be it branded retail, or even for that matter, even the real estate space. I think although it has done really well over the last 1.5 years, but I think the ground level demand is very robust and this can continue. So moving more from, capex kind of stories to consumption led stories. And on the other hand, the whole infra play, we like the cement sector now. We believe that the overall consolidation is picking pace. And as this gathers momentum, there will be significant price discipline. And therefore, the profitability also can improve over next 2 to 3 years. So I think that consumption and within infra, cement, these two spaces are looking very attractive.
Thank you very much, Ajay, for joining in. Let's get in a quick corporate conversation. Workhardt is in focus as the US body clinical and lab standard institute for CLSI gives WCK 5222 high susceptibility breakpoints after the successful use to treat a cancer patient in the US. Ekta caught up with Habil Khorakiwala, the chairman of the company, to know more about the potential of this particular drug. Listen in.
Zenic, which is 5222, it's a brand name. I believe it has, most importantly, it saves life. There is no antibiotic here today or likely to be there which will deal with resistance organism. And in India, the incidence of antibiotic resistance organism, which is very conservatively done, is about 750,000 patients. And this drug is it is being priced comparative drug in US market for a treatment about $15,000. And we intend to market this product in India at a heavy discount of 85 to 90%. And with that, our approach in Indian context is how do we make this drug accessible to larger number of patients in terms of affordability, in terms of its usage. So that is how we would be roughly pricing the product. And we believe there would be extensive market.
Can you tell us about, for example, when do you expect an India commercialization of the drug and when do you expect a global commercialization of WCK 5222?
We expect India commercialization sometime early calendar year 25. That is FY26, more or less we will have a full year commercialization. The emerging market commercialization would be another 12 to 18 months later on. In the Western commercialization, we expect sometime on later part of 26.
Out-licensing opportunities for this drug?
Yeah, we have thought through this, and what we thought that we should monetize the outsourced licensing for the Western market, where 90% of monetization value is available. So that is what we would do. We'll go to a global pharma companies and monetize it once phase 3 clinical trial is done. Whereas in India and emerging market, we intend to market ourselves for two reasons. One, that we have a whole portfolio of new drugs available. Second, our objective is to make drug accessible and affordable. And that is a kind of, you can say, social call along with what we have done. And I thought unless we can make drug accessible and save lives, that is a very important part of it.
You raised funds via QIP as well recently. What is it going to be utilized for? How much is going to go back into your R&D program? How much of it is going to be utilized for reduction of debt?
Let's put it differently. About 40 to 50% we will utilize this for the research program. Partly we will need for our operating working capital. And whatever debt is due as and when, we will pay on time.
When it comes to the US business, you're now only looking at contract manufacturing, or are you going to look at probably any kind of long-term remediation or, manufacturing and resupplying to the US?
See, US market, we have de-emphasized as a part of our long-term strategy. Mainly because we don't have a critical mass. We are doing out-licensing. That we will continue what we are doing. We are not going to invest significantly in research as far as the US market is concerned. Our focus would, in addition to new drugs portfolio, would be in biologicals or insulins, new insulins, other diabetic product. That we would be focusing on it, and we would be available in all biosimilar space in next 3 to 4 years with whatever is getting off the patent in India and emerging market.
GLP-1?
GLP-1 is one of those areas, but we are also certainly looking at it. Technology is in a similar space.
Okay, well, that's an interesting chat. We'll take a quick commercial break here. The market's down, 30 points or so. Look at the volatility. So 24,015 is where we stand at. We're going to come back and tell you what's happening in dealing rooms. Nimish has been making those calls, and he'll get you a better sense of all of what's going on. Stay with us. Welcome back. As promised, D Street Chatter. Nimish, of course, is getting us the market intel in terms of what's going on right now. Nimish, afternoon.
Hi, Prashant. A bit of consolidation in today's market, but at least some of the lead indicators are suggesting a bit of caution as well. So maybe rightly so, a bit of sluggish market today. But again, the theme of this week was the leadership was back in the large cap names, and rightly so. Reliance has hit a market cap of over 21 lakh crore. ICICI Bank this week hit a market cap of over $100 billion. So clearly the leadership seems to be back in the large cap names, and you've seen some bit of underperformance in the broader market stocks. So it looks like a bit of shift towards the large cap stocks. The flow seems to be positive again in today's market. That's been the trend for this week, and looks like the FI momentum in terms of buying is back, and largely in the large cap names. But PSUs for a change has seen some bit of traction as well in today's market. The sector of the day is clearly the tire stocks. Big move on those names, largely in anticipation of price hike. So that's been the key reason why all the tire stocks are buzzing in trade. A word on Telecom though, while Vodafone is down in today's market, so is Bharti. But from an institutional perspective, the feedback is there is buying interest overall in the telecom sector. Bharti is largely down in anticipation of a large block. We've been saying this for the last couple of days, that potentially one large block can come. And even in Vodafone Idea, the feedback is some large hedge funds have actually bought into today's weakness. So while the screen may say something, but from a flow perspective, there is buying back in the telecom names as well.
Absolutely. What about individual names, Nimish, on your list?
Well, Prashant, the first is the theme which we've been talking every day, potentially large blocks. So I'll start with two large blocks which potentially can come. The first one is Havells. The stock has been a big outperformer in the last couple of months, almost at record highs. But now at these levels, the feedback is there could be a block from a large FI investor very soon. So Havells is first stock to watch. And the second is PNB Housing. We've already seen two large blocks in the last 15-20 days. But now the indication is there could be a very large block from a private equity investor. So that's something to track in PNB Housing as well. The second stock is Tata Motors. After a bit of consolidation, some bit of buying seems to be back in Tata Motors in today's market. So expect high delivery volumes and a bit of FI interest as well in Tata Motors. The third stock is Manappuram Finance. We saw a big move in yesterday's trade. The volumes were on the higher side. The stock has actually outperformed in the last couple of weeks, but now some bit of selling pressure has emerged. Potentially some bit of profit booking as well in Manappuram at these levels. And the last is Patanjali Foods. We keep talking about this anticipated move from the group quite often. Now the indication is that it can come very soon. So a potential merger of the non-food businesses is likely in Patanjali, and hence that stock has been buzzing off late.
Okay, thank you very much for that. I think Cdsl is going to consider a bonus on 2nd of July. So that's also another reason. But Mitesh is now with us for a few BTST calls or reverse trades, which can be played out over the weekend. Mitesh.
See, ONGC is on my radar. I think that's BTST with a stop at about 271. And look for a target of around 278 here. And Maruti is on the sell side, STBT, with a stop at about 12,100. Look for a target of around 11,850 to about 11,800.
Okay, all right. Actually, so interesting Maruti on your list, Mitesh. Thanks for that. Auto sales numbers for the month of June are due on Monday when we come back. Yatin is standing by with what to expect. I mean, at least what the street is expecting. Yatin, good to have you here on the channel. Go on.
Prashant, when it comes to the auto sales numbers, expect a subdued month of June because usually it's the monsoon season and car sales generally lag. When it comes to the four-wheeler space, let's talk about the auto expectations for Mahindra and Mahindra. New models are doing well. The last year base is high, and despite that, expect a 15% kind of a jump in Mahindra's numbers. Numbers expected to be close to 17,500 units. When it comes to Tata Motors passenger vehicle segment, again a base effect playing the role. Numbers would be flat on a year-on-year basis at close to 46,000 units odd. Maruti Suzuki, watch out for this one. Numbers should be almost 1.5% lower to 2% higher. That's what the broker poll is. And probably 1.6 lakh units is where you can expect Maruti's numbers to be. When it comes to commercial vehicles, Tata Motors commercial vehicle sales expected to be flat. Ashok Leyland would show a probable growth of 3%. So that is one stock to watch out for. Two-wheelers, and this is an interesting space. Numbers will be mixed. Bajaj Auto exports are subdued. So probably the numbers would be close to 3.4 lakh units, almost a flat number year on year. TVS Motors, a 9% growth on higher scooter sales, and new models are doing well. When it comes to Eicher Motors and Hero MotoCorp, both will see a decline The rural markets are lagging, and probably Hero MotoCorp and Eicher Motors will have to bear the brunt. And when it comes to tractor sales, start of the monsoon, so expect a month-on-month increase for both M&M tractor division as well as Escorts. But on a year-on-year basis, it would be slightly flat. So on a month-on-month slight growth, year-on-year almost flat for the tractors business.
Thank you very much for that. Get into a break. We'll come back and get to the closing of today's trading session. Welcome back. A bit of a correction is set in. The Nifty is very close to that 24,000 mark, in the red now, on the verge of, in fact, breaking that 24,000 mark. It's been a bit of a choppy session. Auto stocks are correcting, I think. Tata Motors, M&M, Maruti Suzuki. Pull up the intraday chart of some of these stocks. And even State Bank of India. State Bank of India is off about 2% from the session highs. So the last 30 minutes has seen some profit booking set in. We're still on course to wrap up the week with strength, a 2% gain. But looks like it's going to be a 24,000 handle on the Nifty by the close of this week. Sudeep Bandopadhyay, the Group Chairman of IndiTrade Capital, is with us on the show now. Sudeep, afternoon. Thank you very much for joining in. Coming first on, the kind of mid-cap action, a vibrant screen today. You've got New India Assurance, Prestige Estates, so many stocks which are moving up on pretty large volumes, Cdsl, IIFL Finance. Anything that you're recommending?
There are a lot of interesting ideas in mid-cap, of course, but we like in the pharma space, Mankind Pharma. I think that's one company which is very well positioned to take benefit of the growing in domestic market because they're fully focused on 95% plus of their business comes from domestic market, and they're not dependent on the vagaries of US generic pricing pressures and things like that. So that's one idea we like. Of course, Cdsl continues to remain a favorite. The valuation has moved up quite a bit. Of course, the excitement today is on account of the bonus, which they are expected to announce soon. But otherwise, also with this, what's happening in the bond market, what's happening as far as insurance dematerialization is concerned. So long term, I think it's a fantastic story of Indian retail financial market participation. And definitely from a long-term investor's point of view, even now CDSL looks good. But as things stand today, I think it's little, fully priced. The other sectors and spaces include banking and financial services, where also a lot of mid-cap ideas. Let's say a federal bank, I think it's very well positioned, and the pricing-wise, it's definitely attractive if somebody is looking at long-term. So things like that, I think in the mid-cap space can definitely be looked at.
The Nifty Bank is now nudging towards a 1% fall now. 500 points gone on the Nifty Bank. It was flat through a greater part of the trading session, but the last 30 minutes has seen a correction set in. Maharashtra to see a petrol price cut by 65 paise and a diesel price cut of about 2 rupees per litre. Remember, the assembly elections are upon us in a couple of months, and there has been on petrol, it's a small price cut, 65 paise. On diesel, it's a cut of about 2 rupees per litre. Sudeep, oil marketing companies?
Well, I think we have seen enough of these vagaries of decision making based on the election season or not. But fundamentally, I think oil marketing companies are strong. Just that you have to factor in all these pre-election and post-election volatility. If somebody is a long-term investor, I think both PPCL and HPCL does merit attention. And I think they should do well from a one-year perspective.
And tire companies, where I think prices have been hiked, or there is an anticipation of a tariff, a price increase for tire. Anything which catches your attention?
Yeah, absolutely. I think tire companies are in a very good space. In spite of natural rubber prices going up, the price hike which these companies are taking should take care of the margins. Second, I think the export opportunities are emerging, and companies like CEAT have significantly enhanced the capacity. Off-road tire companies like BKT also have done the same thing, and the global opportunities are opening up for Indian tire companies, and that should help them. As things stand today, I think we do like JK Tire and we do like CEAT as well. So I think both these tire companies can look at. Apollo and MRF are good, but valuation-wise, we like JK and CEAT.
Yeah, no, absolutely. Throwing open the field wide for you, Sudeep. Hi, good afternoon. Anything you... it's, by the way, it's turned out, I was just noticing, it's been a fantastic June. You know how much the Nifty is up in June? 6.5%. Bank Nifty is up 7%. These are some impressive gains, right? Not what we thought when we started the month of June. So even though, it's a 40-point downtick, but, it's been absolutely fabulous. Earnings will start, IT will start reporting first up, and then, of course, in the second half of July, you'll have the budget, etc. Sudeep, you think the budget is going to be the big one?
Well, a couple of things, Prashant. One, I think before the budget, we'll get to see corporate results. They will start coming from, I think, towards the end of next week. And of course, we'll get to know what's happening with the monsoon, the intensity of it, spread of it, distribution of it. I think both these factors will be very, very important from a market point of view. Then, of course, by the time we sit for the budget, I think by and large, the major corporate results will be out, as well as the fate of the monsoon will be out. So with this knowledge, we'll sit for the budget. And of course, I think things are looking good based on predictions, based on what we gather, both for corporate results as well as monsoon. Now, as far as sectors are concerned and liquidity is concerned, I would say that BFSI continues to remain attractive. So does the infrastructure. And in infrastructure, Larsen has been my favorite for a very long time, and it hasn't really moved the way some of the other companies have moved. So I still believe that there is significant opportunity in Larsen. As far as flows are concerned, I think we have hardly seen any FII net inflow. I think we are pretty much flat. And whatever the market has done is based on domestic inflows. And we believe that at some stage, FII inflows will start pouring in. And that should take the market to a newer highs post-budget.
Did you look at this acquisition of Navkar Corp by JSW Infra?
It's a very good acquisition from a JSW point of view. And they did at a slight discount. And I think this deal was in the making for quite some time. And the way the things are positioned, I think it's a very, very good acquisition, which should help JSW Infra in a big way.
I think well put. Thank you very much, Sudeep. Short conversation today, but good to have you with us here as always. Thank you very much for your time. I mean, we're going to end flattish, right? I mean, about 40 points lower, so it's neither here nor there kind of a close. But for the week, we're up 2%. That's Friday to Friday. The Nifty Bank will end not 2% higher because today, because of private banks, there was a bit of a pullback, but we'll end up 1.25% in the green. And mid caps and small cap index will end about 1% higher. And the mid cap index, I think, will also end, in a flat kind of zone. So for the week, about a 0.5% gain in the mid cap index. So to that degree, if you want to nitpick, you can say that, well, it was a large cap week, but not really. Actually, the sector of the week, which I think went under the radar and I think should gain prominence is, of course, IT services. The Nifty IT index was up almost 3% Friday to Friday, and that'll be first off the block with earnings which will come, start early July. Rima.
I think the big difference today versus the prior four sessions is today we're ending the day's low at 2,400. In all, through Monday to Thursday, markets started off subdued, flat, slightly lower, and then ended up at the day's high. There was this intraday recovery. But today, in the last 30 minutes, there was a sell-off, and the Nifty is ending at 24,000 in the red, snapping a 4-day winning streak, though the mid-cap index did play a bit of a catch-up. The big winners of the day and the week, Dr. Reddy's 2.5% up. That's the top Nifty gainer. And even for the week, it's seen a 6.5% rally on the back of that Nicotinella news that came out 2 days back. Oil and gas had a good session. ONGC, Reliance Industries, a milestone of 21 lakh crore of market capitalization, and Reliance Industries gaining 7.5% this week. Autos was a mixed bag. Hero MotoCorp, Tata Motors closing up in the green. On the way down, Maruti, Eicher Motors saw some selling pressure, and private sector banks. They were the big laggards today. IndusInd Bank, Axis, ICICI Bank, and Bharti Airtel too came in for some amount of profit booking. Well, with that, it's a wrap on Closing Bell. But don't go anywhere, because after this very short break, we'll be back with our Friday special Editors Roundtable on the other side.